Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Quant and its token QNT. None of the content is financial advice. Right now, the price of Quant is at around $107. Right now, over the last 24 hours, there has been a decrement of about 7% in the market cap. But over the last 7 days and over the last 30 days, Quant has rallied by about 9.5% and 44%. Market cap about 1.2 billion. Volume around 33 million. It's still ranked number inside top 100 by market cap. At market cap is ranked around 62. Does have a max supply of about 14.8, almost 15 million, out of which 12 million, almost 80% of the max supply is in circulation. You can check it over here, 81.1%. That kind of bodes well with respect to how the price is performing with respect to market cap. Again, essentially this is the market cap view and this is the price view. That means all or most of the market cap related growth is getting reflected back in price. Again, minimal impact of any token based inflation, at least historically speaking. Right now the price is above the 20-week simple moving average and the 21-week exponential moving average. The 20-week simple moving average is around $85, that and 21-week is at around $88. If there is a correction in the market, those are the two support levels to watch for. Per the Fibonacci level models, the key areas of bull rally to look for is the 0.23 fib level coming in at around $131, the 0.382 at around $187, and then 232 at 0.5 fib levels. So those are the 3 fib levels of interest. Again, the 0.5 fib level was reached in October 2022, again in the bear market of 2022. So and there was a lower high in December of 2024, slightly lower than 0.382. If the series of lower high structure continues, the next level to watch is $131. If there is a breakout from there, then the structure could favor a rally to about $232. That's just an interpretation of the models. If we look at the machine learning based content related to Quant, again all of the content here on is available on cryptoweeklies.com. Link on the bottom of your screen. You don't have to sign up or pay for anything. This is the output of our machine learning model, which forecasts what could be a theoretical bull case, euphoria case, and bear case for Quant. This uses 6 months of forward looking outlook using historical price since 2018, then since the token was launched, at a weekly average price, what is, and based on that weekly average price, the model has been trained to identify what is the theoretical upside and downside. So the first line of interest, now that we are in the post halving year, is this yellow line, which is the 1 standard deviation non-euphoria bull case. If that non-euphoria 68 percentile bull case confidence forecast were to pan out, the price could be between $125 and about $225. That $225 comes close to that 0.5 fib level. So basically, the interpretation of both the models, the Fibonacci level model as well as the machine learning model, is that if there isn't any euphoria in the market, the peak could be at around 0.5 fib level, or at 200 and, roughly speaking, $230 or so. If there is a euphoria in the market, that is again a 2 standard deviation rally instead of a 1 standard deviation rally, in the next 6 months, the price could be between $137 and about $340. So $340 comes really close to that 0.786. So again, major area of confluence at around 0.5 and 0.786 from the previous all-time high at around $425. That's where the market cycle peak in 2021 was for Quant. So again, the euphoria case, 0.786 at around $340, the 0.5 at around $230. Those are the major areas of interest for this model. All things equal, the base case scenario highlights what could be the directionality of the price action in the next phase of the market cycle. That is, again, if the price has more chance of going up with time or down with time. This pink line suggests that if all things are equal, the price has slightly upward bias from $110 to $138. So the magnitude doesn't matter over here that much as the direction at the base case level. The bear case says that if there is a panic in the market in the next 6 months, the support could be between $78 and about $104. So slightly between 10 to 25% down from the current price of about $105. So that's the support for Quant. The regression based fair value estimation, the polynomial regression model, helps identify this pink line, which is the fair value for Quant, helps identify if the token is in accumulation phase or has been overvalued. This pink line is currently valued at around $94. So price is slightly above the fair value, but that is expected, especially what it did back in the last post halving year in 2021, where the price not only went higher than this pink line. If you apply 1 standard deviation residual, it went higher than that 2 standard residual, and also close to that, slightly higher than the 3 standard deviation residual. So these levels in this bull run could be at around $160, then $270, and ultimately at around $470. So again, as the market cycle matures, or the asset class matures, getting the 3 standard deviation rally every single time becomes harder and harder. So realistically speaking, again, anything between $160 and $273, that's the regression based valuation. The beauty of this model is its utility is not in just the bullish phases, but also the bearish phases to identify the bottom. This model did a phenomenal job identify when the price was not just below the fair value, but 1 standard deviation residual below the fair value, like it was back in May of 2022 until about July, August of 2022. This time around, the price did come close to the fair value once in August of 2024, and then back in about early April of 2025, when the market did eventually take a cool off. So next key level to watch, if the prices stay meaningfully above this pink line, which is the fair value at around $94. If they do, the 68th percentile bull case is all the way at about $160. That's the next step in terms of what the regression based oscillation could do. They do oscillate from this bottom green line to the top of the channel at around the higher end of the yellow line, which is the 1 standard deviation bull case. Together between the yellow line and the green line, the asset spends about 68% of the time, that is 1 standard deviation time. If you try to incorporate slightly higher bounds, that is the 95 percentile case, about this orange and the dark green line, price spends about 95% of the time. So as expected, the 2 standard deviation moves for Quant at this point are estimated at around $273. But if you want, this is again as of today, if you want an extrapolation of the 6 months, what that 2 standard deviation ceiling could look like in next 6 months, again, this is the same regression based valuation, does have a future extension. Again, that is an extrapolation for what the function could look like in the next 6 months based on the upswing, the recent upswing. That is, the peak regressions helps identify where is that overvaluation zone at any given point in the market cycle. That dotted red line helps identify. Right now it's at around $235, as close as that can be with the 0.5 fib level. But in 6 months in time, that level could be at around somewhere between $400 and $430. That takes the price close to that 1 fib level, that is close to that previous all-time high for Quant. This model identifies the risk of accumulation with the color codes based on the distance between the price and the regression based fair value. Helps identify if the token is in an accumulation phase, especially for Quant, whenever the risk levels are less than 20%. Again, over a longer period of time, this asset spends a considerable amount of time between that lower than 20% risk. Helps create that accumulation phase. Again, if you want to know when the asset has less than 10% risk, this identified the bottom in 2022 perfectly. Just because it did back then in 2022 doesn't mean that it could identify the top perfectly. That's why we have multiple models, again, and none of the content again being financial advice. The opposite of this is, where is that overvaluation territory where the rallies usually indicate some sort of a euphoria, that is between 0.3 and 0.6 risk. Whenever that phase occurs, the price in a non-euphoria environment cools off. If there is a euphoria in sites, then the risk again realistically can go to about 0.7. That price action is between $100 and about $204 per this model at this phase of the market cycle. So that means a $204 dollar quant at this phase. I'm not saying that that's the eventual bull run peak for quant, but at in late May of 2025, 210 dollars or $205 worth of quant would be considered as euphoric as it was back in September October of 2021. So that's where we are with respect to the regression based model. If we were to look at this 20-week simple moving average based analysis for this asset, again going to that intermediate risk between 0.5 and 0.7 per this model, the peak could be somewhere between $230 and about $300 for quant. The higher end is at around $380. So that's a simple moving average based extrapolation based forecast. So at the end of the video, we have an overall estimated bull run target as a confluence of multiple models. This is the time weighted average price model. This model has done a great job identifying the bear market lows where the price for assets such as quant is lower than the time weighted average price that marked by this blue line. That means there is a high likelihood that the price at that level could be well digested for any moves in the next bull run. That means if the asset has an adoption accumulating below the time weighted average price, definitely not the worst idea. Again, not financial advice. Right now the time weighted average price comes at around $72. Back in May-June time period, it came at around $49 again. These models, again, no model can predict what the prices could be if, let's say, there is a panic in the market, a wider recession in the market. But nonetheless, if the hypothesis is that if the asset has a chance to recover in the next bull rally, or if it has some adoption going for it, accumulation below the blue line in the depths of the bear market, looking back, provides the most asymmetric bets. This model did identify the August lows as well as the August 2024 lows as well as the April 2025 lows perfectly, and that signaled an accumulation target. We did make videos related to quant back in February and late February and early March on this channel. So if you are interested, please check out those videos. Also give us a like and subscribe to stay updated on this risk and machine learning based journey for evaluation of crypto assets. Again, not financial advice. Using all of these models that we discussed, the estimated bull run target for quant as a not using the machine learning model, but using the three regression based and risk based model, the regression risk model, the time weighted average price risk model, the simple moving average risk model, weighted risk is coming in at around 30%. The estimated bull run peak is at around $350. That's the target for this bull run per confluence of most of our models, representing a reward of about 3.2x. And again, these targets tend to be more conservative. That's because it's an estimation based on risk reward and expected value, none of the content being financial advice. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.